This is a review of Mitsubishi Estate's FY2025 second quarter financial results covering April to September 2025. Mitsubishi Estate, also known as Mitsubishi Jisho, is one of Japan's largest real estate developers and a core member of the Mitsubishi Group. Mitsubishi Estate is best known for developing and managing properties in Tokyo's Marunouchi district. In the first half, operating profit rose year-on-year. These results were mainly supported by leasing activities for new office buildings, rent increases for existing properties, and steady performance in the retail and hotel businesses. Mitsubishi Estate noted that most capital gains will be recorded in the second half of the year, with negotiations progressing steadily. For the full year, Mitsubishi Estate expects operating profit to reach a record high. Profit is also projected to hit a record high, marking the fifth consecutive year of record profits, driven partly by sales of strategic holdings. Return on equity (ROE) is forecast to rise to around 8%, showing progress toward Mitsubishi Estate's 10% target. Regarding shareholder returns, the dividend for FY 2024 was 43 yen per share, and the forecast for FY 2025 is 46 yen. Following Mitsubishi Estate's policy of increasing dividends by 3 yen every year through FY 2030. A 100 billion yen share buyback program for FY 2025 has also been completed. Additionally, Mitsubishi Estate plans to cut its strategic holding stocks by half by FY 2027. In the first half of FY 2025, operating revenue rose sharply to 743.2 billion yen, up 15.9% from the same period last year. Operating profit reached 107.5 billion yen, an increase of 7.7% year-on-year. Profit grew by 17.4% to 58.1 billion yen. By segment, commercial property business recorded lower profit because capital gains were smaller in the first half and initial costs were incurred for new projects. Marunouchi property business performed well thanks to strong office leasing, although some income was offset by temporary building closures for redevelopment. Residential business showed a major profit increase driven by strong condominium sales. International business remained nearly flat, while investment management business posted a temporary decline due to one-off expenses. The net profit progress rate is only 29.8%, but Mitsubishi Estate expects more capital gains in the second half, so it remains in line with the plan. For the full year FY 2025, operating revenue is projected to rise significantly to 1.85 trillion yen, an increase of 17% from FY 2024. Operating profit is expected to reach a record 325 billion yen, up 5% year-on-year. Net profit is forecast at 195 billion yen, an increase of 3%, marking the fifth consecutive year of record profit. By business segment, commercial property business is expected to post lower profit than last year due to fewer capital gains, but hotel and retail operations remain strong. Marunouchi property business should stay around the same level, as higher rents for existing buildings will offset temporary declines from redevelopment closures. Residential business is projected to see a modest increase in profit thanks to solid condominium sales, even though capital gains from rental apartment sales will decrease. International business is forecast to grow significantly, driven by higher capital gains from property sales overseas. Investment management business is expected to improve, supported by greater fee income from expanding assets under management and the end of goodwill amortization. Capital gains included in operating profit are set to rise, mainly due to contributions from the international segment. Mitsubishi Estate expects both operating profit and net profit to reach record highs again this fiscal year. The company also noted that, depending on overseas market conditions, it may shift some property sales from overseas to domestic markets to optimize capital gains. Mitsubishi Estate plans to pay a dividend of 46 yen per share for FY 2025, continuing its policy of raising dividends by 3 yen every fiscal year until FY 2030. This means the dividend is expected to reach 60 yen or more by FY 2030. Mitsubishi Estate implements progressive dividend policy, reflecting confidence in long-term growth and a commitment to stable, predictable returns. Mitsubishi Estate has completed a 100 billion yen share buyback for FY 2025 and stated that it will consider additional buybacks depending on factors such as share price, cash flow conditions, and market trends. Mitsubishi Estate has set a new quantitative target to reduce its strategic holding stocks by more than 50% by FY 2027 compared with FY 2024 levels. By selling these shares, Mitsubishi Estate can realize unrealized gains and use the proceeds to fund additional share buybacks or other shareholder return initiatives. Stock price. This chart over the past year shows the stock price in Japanese yen at 3,298 as of November 13. This chart shows the stock price in US dollars at 21.31 as of November 12. Like Mitsui Fudosan, Japanese real estate stocks had risen, but after the earnings announcement this time, the Mitsubishi stock price fell slightly. Current PBR is 1.61 and PER is 20.5. Dividend yield is 1.39%. Compared with the past few years, all indicators such as PBR, PER, and dividend yield suggest that the stock is more expensive. As real estate stock prices have risen sharply, their valuations are now higher than in the past. Conclusion. Despite slower capital gains early in the year, Mitsubishi Estate expects a sharp increase in the second half, keeping full-year targets on track. For FY 2025, both operating profit and net profit are projected to reach record highs for the second and fifth consecutive years, respectively. Mitsubishi Estate continues to strengthen shareholder returns through its progressive dividend policy and ongoing share buybacks. Overall, Mitsubishi Estate is on track according to plan.